Okay, guys, so what I'm gonna do is continue from where I left off last time. Alright. Alright, so on the last call, I was talking about uh, the next step you're gonna look at is how to actually take the trade, right? How to interpret the pullback and how to take the trade on your phone. Alright, so essentially, what we were looking at is price breaking out here, coming back down to the zone and then buy. However, yes, in hindsight, it looks straightforward, but you have to look at each candle to understand the action that took place at that point in time so that you will know what you will have actually done in real time. All right. So these are the main things I want you to consider when you're actually entering and setting up stop loss and also securing partial profits and closing your trade. Because in the setup that I do, I don't set the stop loss and the take profit, nor the entry, right? This is just showing estimation of where it's going to pull back. It's looking at this zone here, right? It's also showing the action of price that we predicting or looking to react to, all right? So let's look at what happened here. So price came up, it tested this resistance zone, and it initially respected it, but then it came back up and with a strong move up, it broke this resistance zone, right? And for that hour, that is what that candle did. So now, at that point in time, you're looking at this and you're like, all right, let me block out the other candles to show you how you will actually go through decision making when it comes to taking a trade. All right, so let's say this candle happened, right? You don't know if this price is going to come back down into this area. You're looking for price to come back to this zone, test it, and for the candle to close, the body of the candle to close above the zone to give you a fair idea that it's going to continue going up, right? That the pullback was successful. So let's look at the first candle out, all right? So the first candle was a bearish candle. It did not touch the zone. It formed a bit of a wick at the bottom, and at the top, where it opened, there was not much wick formed. So you could see that this was a pullback, attempted to go lower down. It didn't, right? Then the next hour, what we saw is price went further down and then went back up, right? Because this is a bullish candle, right? Price will have opened at the bottom here. It will have closed at the top here, right? But before it closed at the top, it will have gone all the way down here. Now, in at this point in time, this candle will have been completed. So you could use this candle as your reference candle to set your stop loss and also identify a potential entry point. Now, this entry point is actually, in this case, is actually your highest entry point because the pullback happened after. Obviously, this is the high of the breakout candle. So what you want to do is, first of all, to determine if it is you could get into this trade without worrying about what's happening on the inside here, you could measure the spread between the stop loss and the entry at that point in time. Now, the spread was 64 pips, 65 pips essentially. For someone with $1,000 account, if you trade a dollar pip, that's $65 risk, and that risk is too high. Well, not necessarily. For some people, they willing to accept that risk, but the recommended risk for your account is 1 to 3%. So therefore, you basically want to take 50 cents a pip instead of $1 a pip. That will have the the risk, right? So instead of paying $65, now 50 cents a pip will give you around 32.50. All right, and that's more reasonable in terms of risk. However, if it is you wanted to have a higher lot size, you could enter lower down into when price respects the zone and reverses. So instead of taking the entry up here, you could wait until price does this, where it went down and form a wick, right? And then this is an hour candle, and this hour candle completed. It completed. It closed with the body above, right? So at that point in time, you could enter into your trade because this has shown that it has successfully retested the previous resistance as a new support, right? Now, so you could enter at this point with at the end of this candle here. You will have entered at this point here. But in order to enter again, you have to check the risk. And you'll see that in this case it was 41 pips, right? 41.4 pips. If you were to trade $1 pip, that's $41.40. So you may trade less than $1 pip here, about 80 cents a pip, right? Let's check the calculator. If you were to do 41 by 80, that's $32.80, right? So you could either do 80 cents, right? Or you could do 70 cents, right? 41 by 7.7, that's $28.70. So now in your lot size could actually be 0.07, which represents 70 cents a pip, right? You could set a lot size of 0.07 here, right? And even if you decide to enter lower down, at the top of the zone here, you could measure the distance from the entry to the stop loss. That's 22 pips, right? And 22 pips, you will look to risk at 22 pips, you might take it at 0.9. Sorry, not 0.9. This is 22 is below 30 because the maximum um, amount of money that you want to risk on $1,000 account, right, is $30, which is 3%. So if you have a spread of, let's check it again. If you have a spread of, well, you need top of these, right? A spread of $23, right? You could probably take it at 1.2 by 20. Oh, forgive me, guys. Forgive me. 24, right? Right? So $1.20 per pip, you could take it at that point, right? So you see that the smaller the spread, right, from the entry to the stop loss, is the larger the lot size that you could take, right? So in this case, if you took the trade here, you notice that the price came back down here, all right? So at this point, you could have entered either here or you could have entered up here, You could have entered here and experienced some drawdown, but it didn't hit your stop loss. There's multiple ways that you could approach it, right? If you approach it higher up here, it's a more safer way than anywhere in here, because this doesn't have to respect it. This could go back in here, right, into this area, all right? But at this point, if it is you enter higher than the previous high, it's because a bullish trend is forming, is continuing. So therefore, you're expecting it to go higher, right? So what I want to do, well, it went into profits, right? It went into profit. What I want to also show is how do you manage the trade when you get into your trade, right? So let's say you took this trade. What you will do when it goes up about 20 to 30 pips, I'd say 15 to 30 pips, right? What you do is you change the value of the stop loss and give it the value of the entry price, right? And then when the price continues up another 20 pips to 50 pips, you can move your stop loss into stop profit, right? Where basically now, if it closes, if it reverses, you will close in profit. Let's say you move your stop loss from the entry to 20 pips, right? So you move your previous stop loss into stop profit, into stop profit, right? And prices at prices of 50 pips, around here, right? You will have moved your stop loss, right? You will have moved your stop loss up from the entry here, right? You will move your stop loss so that when it reverses and it touches there, it will basically close in partial profit. And what you could do at that point, right? You could enter the trade again, especially when this wick form. At this point, you set your new stop loss underneath here, and you'll enter the trade when this candle closes, right? And the risk is 47 pips. All right, so you could continue to trade like that. It's called trailing stop. So let me show you how you actually place the trade and that kind of stuff on your MetaTrader 4. So I have here actual setup of the screen where you could actually take the trade. Well, I could demonstrate how to take trade. Now, the thing is, the market is closed right now, so it'll be tough. You can't really, uh, you can't get a USD trade in because the new order is not enabled. But what we could do is we could look at another like Bitcoin just to get into the interface so that those of you who are new who don't know how to place a trade could see how it works. So the thing that we look for By the way, we look for the spread. And your USD, you expect to have a spread at least less than 10, right? The market is closed. That's why you're seeing these high numbers, right? So once the spread is acceptable, you click on the currency pair, and then you see a new order, right? So let's imagine this is Euro USD. You click on Euro USD, new order, and you choose your lot size. And we said we were entering at this point here, which is at the 43 pip level. And we said that the lot size for 43, I think was 70 cents per pip, right? Which is 0.07, 0.07. And then on your stop loss section, which is on the left, you will put the stop loss value that you define, right? So the stop loss value will have been below this low here, so like 1.08704, right? So you put that number, 1.08704, right? And then for the take profit level, which is this green part, you can leave it blank or you can put it at a price where you're expecting it to go, right? Now, I could tell you that here was a resistance. It's just that it's not drawn there right now. If you go back in the history, right, you will see that this was a resistance area, right? You could actually draw a zone here, all right? So you could have put your take profit here, and it did exactly that, right? You could have used this information here to draw your zone. You might have drawn the zone where you will have probably let the base of the zone touch this price here. You may have drawn your zone like this. Same difference, right? So coming back to setting up the trade, you place your stop loss. You could have placed your take profit at this area here, 1.10443, 1.10443, right? And that's it. And then you place you could do a market execute and say buy, right? That wouldn't execute because that wasn't your USD that I just pulled up there. This wouldn't execute, right? So, and then that's how you place the trade. That's how you place the trade. That's it. Now with this interface, quickly you have the area where you see the quote, which is the currency pair quote. You have the section where you could view the chart, and here is where you have live trade, right? I actually had placed the Euro USD on a demonstration video I did before, right? Where I expect the Euro USD to sell, right? That was here. The currently price is at this point, it broke, retested, it dropped, came back up. I expected it to drop again, at least to the half of this candle here, right? However, come back to the main thing. When you want to manage the trailing stops, where you want to move the stop loss to your entry price and that type of thing, You click on the price, right? And you modify order, and you put your information there, and it will modify. Right? By the way, guys, this is a demo account, not a real account. All right? I wouldn't put my information out like that. Okay, so that being said, that's how you take the trade. That's just about it. Okay, so based on the videos that I shared, I want you all to review them. And if you have any questions, feel free to send a message. All right? Feel free to send a message so that no matter where I send a trade, you could, basically benefit by knowing how to place a trade. All right? This is the price drop strategy. It could be used with the harmonic scanner. I've shared that already in the past. All right. If you want to go, you can go to my YouTube channel. And you can search for the smart money. Okay, guys. You see my account. That's a smart money. Smart more money. Smart money. Harmonic. Bounce. Track. Right. So you click here. There's different products you could tap into directly from, and you can go through this reproduce, scan, view. All right, their particular trade, right? Zones and stuff, right? You have your zones to cover the area, all right? So you have your zones and stuff, but the thing is, most retail traders, what they will do is that they will they will sell at this point, and they will buy at this point, right? But what the smart money does is that retailing here, they will set their stop order, their stop losses above here, right? And when they're doing their buys, they will set their stop losses below here. So the thing about it is that the average retail trader puts about 30 pips risk. You could go through that video if you want to see, for example, using the harmonic scanner. X and D are basically almost equal, and using price track. What this strategy shows is that it's a combination of, right, so mitigation took place there, right, the harmonic scanner, smart money concept, EMA cross. I use a trend line and the EMA cross, right? EMA cross combination to be able to get a scanner actually better, when you get a signal from the bounce back scanner, you are then asked to draw a trend line and then identify. So if you look at this here, this is a scan, right? The scan gives us confidence that it's a high potential buy. The trend line shows you additional is basically confluence with the zone. So you know you're going to face some level of resistance here. So when that breaks out and it successfully retests, then you're highly confident that you're looking for the buy, right? The EMA cross is just an indicator where when it's positive, the um, the you will see this cross here. If you notice it here, let me see if I can show you. I have it here, and basically the lines cross when they change in direction. So when it's going up, when it's going up, the green line will cross the red line. Right? When it's going down, the red line will be above, it will cross and be above the green line. Right? And you can look at the features here, the settings for EMA cross. It's default settings. I don't know why it's not pulling up. So using a short term EMA at 8 and a longer term at 21. Right? Oh, it just came up there. All right, so EMA 1 is 8, right? EMA 2 is 21, right? And the color, EMA 1 is green, is 8, and the EMA 21 is red. So when the shorter term EMA is above the longer term EMA, that's where you're looking for the buy. When the crossover happens, where it goes above. When the crossover happens and the red goes above the green, you're looking for a potential sell. You can also then use the star, which is stop and reverse, parabolic star. And with the star, what we're looking for is if you're looking at a pullback off of a zone, a break and retest, you're looking for the, in this case, if it's a buy, we're looking for the star dot to be below, indicating that price is going to go up. Right? That's what the indicators are for. So that is it, guys. I look forward to continue to serve you. By the way, guys, I learned this price trap strategy from Christopher Derrick. Many educators use it now, like Vidish and Muller, right? I know Jean-Marc Lyons does some level of it, right? But many other educators use the price trap strategy, all right? Definitely, it's simple to me. All the educators are better than me, by the way, guys. So you want to be in the academy to get this information, to get trade setups from educators using this same strategy, as well as to learn this skill, right? Once it is you learn the skill, the sky is the limit, right? So I highly recommend going through the academy, going through the go live session, and keep on training your mind, right? It will not come, it will not come overnight. You have to train yourself to the point of consistency. All right. Definitely we have some things going on as well. I will continue to keep you posted. But guys, uh this particular stage where we're looking at the drop in the stock market and stuff, there's a lot of activity going on, a lot of good activity going on in the market, right? So if we look at, let's look at the Dow Jones Index. All right, what we saw was, look at that. What we saw was price fell to as low as 18,000 plus. right? And as I anticipated, this was a pullback and it's continuing to drop. The drop is significant, and I expect the drop to be way more. Looking at a possible drop to just under 7,000, right? Bitcoin, all right? So Bitcoin, same thing. Well, it did break the equal high and come back, retest, and starting to drop. But Bitcoin is in this triangle here. So it's in this triangle here. And also, obviously, I have my price traps. So what I'm expecting is price to come back down to this zone here, break above, come back up, probably wick, and at some point there's a breakout that is coming here, somewhere around here, right? It could be on the upside, it could be on the downside. It can even be downside first and then up, right? Gold. For me, gold was interesting this week because I was expecting gold. I'm expecting gold to drop, right? But it real fighting that drop. I mean, if you took it from up here, great for you, all right? I did call the seller at somewhere up there, right? However, I was expecting it to drop by now. It's really fighting up here and found support at 16, 13, thereabouts.